So, questions, reflections on all of this?
You motivated the lowering of the repo path of the weaker growth abroad, but you haven't changed really the GDP forecast for world economy a bit this year actually. Are there specific indicators you're looking at that are indicating a slower growth abroad, or is it just the risk for a slower growth that increased abroad?
No, the issue here is, I mean, when we're talking about the whole world, then that raises the issue, what about Swedish exports and who is buying what, where? And what does it mean in terms of what's going on close to home and in other parts of the world? And then what one has to do is to pass judgment on that.
If I just can add, I mean, in a sense, the underlying development in the international economy is weaker, but that's being hidden by the fact that the forecast now is based on a lower policy rate. So you don't, I mean, net, you don't see the effects. Hadn't we changed the policy rate assumption, then you would also have had a weaker GDP forecast in the international economy. But then the effect comes rather through the kroner and also through international inflation that we've been revising down a bit towards the end of the period. And there's also some positive productivity effects in Sweden. And all of these ingredients, so to say, work to lower the repo rate path in Sweden.
More questions, reflections?
Well, one observation here that is that last time you mentioned, as in September, you mentioned the household debt, that it was unsustainable, the growing rate. You didn't mention that today, and the focus is more now the strong krona. Can you elaborate a little bit about that?
Okay. Well, first of all, we do think it's a good thing for the FSA to having put in place the loan-to-value ratio that they have done. Whether it will have, what kind of effect it will have, if I put it that way, is too early to tell. But clearly, it's a step in the right direction. At the same time, raising the policy rate is also, from this angle, a step in the right direction because it makes it more expensive to borrow. When it comes to the household sector and the steady pace at which households seem to keep borrowing, that's not an issue within the time frame that we're talking about here, but it remains an issue because as long as the household sector keeps borrowing at a pace which is much quicker than the increase in income, then over time that is not sustainable. And that means that the risks coming from this side gradually increase over time. But what we end up dealing with here, which is pretty much what many other central banks also end up dealing with, is how does one then go about factoring that into the analysis, where on the one hand, it's not so much a short-run issue, but it can potentially become a very serious issue beyond the normal horizon that we use when we talk about the inflation target, the way we express it here. And then here we certainly have more sort of homework to do when it comes to figuring out a proper balance between what some people nowadays call macroprudential measures, which is basically making it more difficult or more expensive to borrow one way or the other without raising the rate of interest, and how one combines those types of measures aimed at a particular segment of the financial markets with general increases in the level of interest rates, which is what monetary policy is all about. So my view is that this is a debate that we're going to have to try to deal with as best as we can for many years to come. But it certainly is an issue which also this time exists and has sort of been in the background, but it doesn't mean that it has gone away.
Regarding currencies, not so much regarding the Swedish krona, but if you look at world currencies, what is your feeling, or is there any fear with the, well, I guess the G20 didn't really have anything to say about it, but currencies maybe being manipulated in certain countries doing interventions to weaken their currencies?
Yeah, I mean, these issues won't be solved or sorted out at one particular meeting, because many have talked about the global imbalances for the past 10 years, and what has been so hard to deal with is to come up with a view that eventually actually ends up being kind of, in some sense, the right view when it comes to how to rebalance the global economy in such a way that we have fewer imbalances than what we have had in the past. What now appears to have happened is a situation where, first, leading up to 2007, many talked about the global imbalances, saying that this is not sustainable. Then we ended up with all sorts of problems in the global financial sector and serious problems in some, more serious problems in some countries than in others. And then the whole debate about the global imbalances kind of ended up on the back burner for a while. But now when the most acute financial sector issues have been sorted out in such a way that it's unlikely that the global financial sector will run into the same difficulties as we had in the past few years in the near future, then the whole debate about global balances comes back to the fore. But that doesn't mean that these problems have been solved. They need to be solved in one way or the other, ideally in a cooperative way, whatever that means in this context. It's not so easy to know. And as long as that gradually is taking place, that's probably good for everybody in the whole world. Were this to take off in a different direction with more restrictions on trade and restrictions on global trade, then that would for sure affect us. Presently, given our position in the world, this is something that we're just kind of watching. And as long as the conversation is ongoing and it doesn't lead to all sorts of trade restrictions, that's fine. But this issue for sure won't disappear overnight. Okay, if there are no more questions.
Can I ask a question from the phone?
Sure, go ahead.
Sure, this is Calvin from Morgan Stanley. In prior minutes, you guys mentioned that exchange rates are often unpredictable, and you don't really. It's difficult to base monetary policy on a fixed view of the development of the krona. However, today the krona was explicitly mentioned in your statement, and I was wondering if you guys are now focused on the krona when determining medium-term inflation.
Well, we always focus on the krona in the sense that what happens with the krona affects the inflation rate in the country, but that doesn't really make it any easier because the krona moves up and down so much. I recall when I was working here in the 90s that back in the 90s we tried what then was called a monetary policy condition index, kind of creating a weighted thing between the policy rate and the exchange rate, but that didn't really work. It was incredibly hard actually to make sense of that whole thing, and we're sort of still struggling because we can control the policy rate, but we do not control the exchange rate, and how to weigh two variables together when one you can control and the other one is sometimes sort of randomly moving up and down. It's not so easy. It's not so easy to do, and I think that this is one reason for why we have such a traditional exchange rate forecast. because over the years we have many, many times said that the krona is likely to strengthen.
However, in today's statement, both Deputy Governor Ekholm and Svensson mentioned that if rates were raised too quickly, then it seemed as if it were almost easy to make a causal relationship between that and a stronger krona. Is that true?
Well, I mean, I am not aware of what they have been talking about in the course of the day, and I'm talking representing the majority. And eventually you'll get the full flavor of the debate in the minutes about 2 weeks from now. Okay, any more questions?
Excuse me.
Yeah.
My name is Thomas. I'm also calling from Morgan Stanley. I just have a question more about the recent paper by Christina Nyman regarding the resource utilization indicator that is basically built on the real variables such as labor market data and economic sentiment data. It was shown in this paper that this indicator we can call better captures the dynamics in the GDP growth, namely it's not subjected also to the so many revisions as the HP filter, it was argued. Therefore, I'd like to ask if this implies that the bank will place more of a focus and emphasis on the economic sentiment-based indicators in the future compared to now. Thank you.
Okay. It's true that that's a new indicator that we use, and it's also true, like you said, that because this indicator is based on survey data rather than national accounts, it will not be shifting that much because of changes in the underlying data. So that's the advantage, I think, of that indicator. But we also have in the report now a box that presents sort of a new approach that we will be using based on a production function. I mean, it's not a fantastic new thing. Many use that approach for a very long time, but that has the advantage of linking trends in the labor market to trends in production, and you sort of get a holistic approach on the output gap and other things. So that approach, jointly with this new approach that you were talking about, as well as other indicators, will still in the future also be sort of in the background for making a holistic assessment of resource utilization. So there's no single indicator that has an extremely important status vis-a-vis some other. It's still based on sort of a holistic assessment of the situation.
I mean, these things evolve over time, because at least so far when we have been working on these issues, we have not come to the conclusion that there exists one single optimal measure that in some sense tells us the full truth when it comes to resource utilization. And then looking at in that way, as Per says, then we take a holistic view and look at many graphs and many indicators when it comes to resource utilization, because then at least one doesn't have to move from one to the other and so on and so forth down the road when we go through kind of a learning process. So we're still studying, looking for the optimal when it comes to this.
Are you satisfied with the market reaction today?
Sure. I mean, there's nothing much to really comment on. I mean, it's that the rate would go up was pretty much expected, and eventually, the way we have organized our system, sometimes a few things happen, and we adjust the repo rate path a bit, and there is a bit of a discussion about that, but that sort of goes with the territory. That's the nature of this business. Okay, if there aren't any more questions, thank you all of you for coming, and thank you to those who have been listening over the phone, and thank you to all others watching on the internet.